India's benchmark stock indices, Sensex and Nifty 50 traded with deep cuts on Monday amid escalating global trade tensions and rising fears of a US recession that have shaken investor confidence worldwide. Nifty opened more than 1,000 points lower at 21,743, marking its biggest intraday loss since March 2020. Sensex fell almost 4,000 points on Monday to touch a low of 71,425. However, both the indices recovered some of these losses later on. All the 50 stocks in the Nifty 50 index were in the red. In the Nifty 50 pack, Tata Motors, Tata Steel and Trent hit the lower circuit in the opening session on Monday, while HCL Tech, ONGC, JSW Steel, Shriram Finance were among the top Nifty losers. Technology stocks led the sell-off in today's trade, emerging as the worst casualties amid growing fears of a looming recession in the US economy. The Nifty IT index crashed another 7% in trade, following a 9% decline last week. Metal stocks also witnessed heavy selling pressure as rising trade tensions fueled fears of potential decline in base metal prices. This triggered a sharp crash of over 9% in stocks like Lloyds Metals and Energy, Hindalco Industries, Nalco, and SAIL. Sharp decline in HDFC Bank, Reliance Industries, ICICI Bank, L&T and Infosys collectively contributed to over 350 points of fall in the Nifty 50 index.
See, the reaction in the domestic stock markets at the opening bell this morning is not a surprise at all, given how much US equities fell on Friday and how Asian markets opened this morning. The reason is known to everyone. President Trump's tariff announcements have really spooked investors who expected the measures to be more contained. That said, the charts of the Nifty, small caps, mid caps, and the NEC 500 are clearly showing that important historical, supports have been tested this morning, and that there has been some sort of recovery from, the very large gap down that we've seen. Still, I think it's very early in the day, and it's only the first day of the week. Therefore, we will advise that investors should neither panic nor should they really rush in to buy, given that global cross-asset volatility is very, very elevated as macro undercurrents continue to shift. Now, negotiations between nations that have been impacted by President Trump's measures cannot be ruled out, so it will be prudent to see how things play out. In summary, exercising caution is the name of the game, and that's what history shows us. So let's keep it that way.